Just a few months ago, fueled by a great jobs report and strong economic recovery, the stock market was hitting record highs. Now, heading into fall with increasing COVID cases and a jobs report that was mediocre at best, some experts are warning investors could be in for a rough ride. Our financial expert, Bruce Allen of Bruce G. Allen Investments, is here to talk about that. Bruce, good morning.
Good morning, Gary.
So the Delta variant is causing concern. Are there other reasons that some experts are saying people should be cautious?
Yes, the market's absorbing three concerns. Number one is that the economic growth that we have seen, which was blisteringly fast, over 6%, may be coming off of that very fast height. We saw that concern validated last week by the jobs numbers that you mentioned in your intro. The jobs numbers in terms of August growth was only 250,000 plus jobs versus 700,000 plus jobs. That's the first really negative payroll numbers we've seen. Number two, the market's concerned about valuations. Stocks have gone up a lot, Gary. Over the last 18 months, the S&P 500 index has more than doubled. And that means that people in the stock market have made a lot of money. Some people are concerned that stocks are expensive. And lastly, the Federal Reserve is starting to signal that they may raise interest rates at the end of 2022, beginning of 2023. And there are investors who are very concerned about those rates going up sooner than later.
And not only that, but you were telling me yesterday that September is sometimes viewed traditionally as a bad month for the market anyway. Why is that?
In the last 25 years, Gary, September's had a negative return on average. Some spectacular examples of this are September of 2001, 20 years ago, we had the terrible 9/11 attacks, and September of 2008 when Lehman Brothers went bankrupt. Those are two of the worst. But on average, September's been a negative month, and some of that's because September is the end of summer vacation. People are returning from vacation, kids are going back to school, and money managers and mutual fund money managers in particular are returning to work. And they use that opportunity sometimes in September to sell their losses to minimize capital gains. If you sell a stock at a loss, you can offset your capital gains at the end of the year. So some of that starts to happen in September, and that may be a seasonal factor that may impact the markets this year as well.
Ah, that's interesting. Okay, so given all of that, what are you advising investors to do right now?
I think for most people, whether September is a negative month or not, long-term investors, this is immaterial. However, one thing that people should be looking at, it's prudent to really look at your asset allocation or the balance that your portfolio has between stocks, bonds, and cash. The stock market's gone up a lot, Gary, over the last 18 months. In fact, it's one of the fastest rallies we've ever seen. And that has pushed people's stock allocations or the amount of money they have in stocks in their portfolio up significantly. They may have too much in stocks, and it may make sense for them to talk to their advisors about rebalancing or lowering their stock portion by selling some stocks and beefing up their bonds and cash. So rebalancing is a critical step right now that we think investors should be taking a look at.
All right, we'll see how it shakes out. As always, Bruce Allen, thank you. We appreciate it.
Good to see you.
Okay, take care.